Gold is on the move. In recent months, we've seen a significant uptick in its value, capturing the attention of investors worldwide. This precious metal, often seen as a barometer of economic health, is making headlines once again. It has been surging to new highs, breaking records and setting new benchmarks. The upward trend in gold prices is not just a fleeting moment, it's a reflection of deeper economic currents. This price rally has investors excited. From seasoned traders to everyday individuals, everyone is talking about gold. The buzz is palpable and the excitement is contagious. They are talking about gold hitting $3,000 an ounce. Such predictions, once considered overly optimistic, are now being taken seriously by market analysts and financial experts. This isn't just hype. There are solid reasons behind gold's remarkable performance. Analysts point to a combination of factors, including geopolitical tensions, inflation fears, and shifts in monetary policy. The world is facing unprecedented challenges. From political instability to economic downturns, the global landscape is fraught with uncertainty. These events are driving people to seek safe investments. These challenges are making people nervous about the future of the global economy. The fear of the unknown is pushing them to find ways to secure their financial future. Gold is seen as a safe haven asset. In times of turmoil, it offers a sense of security that other investments can't match. Its intrinsic value and historical significance make it a reliable store of wealth. Investors turn to gold when they're worried. It's a time-tested strategy that has proven effective in preserving wealth through various economic cycles. They want to protect their wealth. Financial advisors are recommending gold as part of a diversified portfolio, and families are discussing its potential as a safeguard against economic instability. This uncertainty is driving demand for gold. The rush to buy is evident in markets around the world, with both seasoned investors and newcomers seeking to add gold to their holdings. Central banks are buying gold. They are increasing their reserves as a hedge against potential economic shocks, signaling confidence in gold's enduring value. Individual investors are buying gold. From small-scale buyers to large-scale investors, the trend is clear. Gold is in demand. They are all looking for stability in a world that seems increasingly unpredictable. As the era of financial uncertainty continues, gold remains a beacon of stability and security for many. Geopolitical tensions are rising around the world. These tensions are a major factor driving the price of gold higher. Wars, terrorism, and political instability all create uncertainty. This uncertainty makes investors nervous. When investors get nervous, they look for safe havens. Gold has always been a safe haven asset. It has intrinsic value. It is not tied to any particular currency or economy. This makes it attractive during times of geopolitical turmoil. The current geopolitical landscape is particularly concerning. The war in Ukraine is a major factor. But there are other conflicts and tensions simmering around the globe. These tensions are contributing to the demand for gold. Economic policies are also playing a role in gold's price surge. Governments around the world are printing money at an alarming rate. This is causing inflation to rise. Inflation erodes the value of paper money. Gold is a hedge against inflation. It has maintained its value throughout history. When inflation rises, the purchasing power of paper money falls, but gold retains its value. This makes it an attractive investment during times of economic uncertainty. Interest rates are another factor. Low interest rates make it cheaper to hold gold. This is because investors are not giving up much interest income by holding gold instead of bonds or other interest-bearing assets. Gold is not the only precious metal that is rallying. In recent times, we've seen a significant uptick in the prices of other precious metals as well, indicating a broader trend in the market. Silver prices are also surging. This surge is not just a fleeting moment but part of a larger pattern that has been developing over the past few months. Silver is often seen as a more volatile cousin to gold. Its price can swing dramatically in short periods, making it both a risky and potentially rewarding investment. But it is also a precious metal with industrial uses. Silver is essential in various industries, from electronics to solar energy, making it a critical component in modern technology. The rise in silver prices is significant for two reasons. Firstly, it highlights the increasing demand for precious metals across different sectors, not just among investors, but also in industrial applications. First, it confirms that the demand for precious metals is broad-based. Investors are diversifying their portfolios to include a variety of metals, reflecting a growing interest in these assets. It is not just gold that is benefiting from the current environment. Silver, along with other precious metals, is seeing a rise in value, indicating a robust market trend. Second, silver's industrial uses make it a barometer for the global economy. Its demand is closely tied to industrial activity, which means its price can reflect broader economic health. When industrial activity is strong, the demand for silver rises. This correlation makes silver a valuable indicator of economic trends and industrial growth. The current surge in silver prices suggests that the global economy is still growing. Despite various challenges, the demand for industrial metals like silver remains robust. This is despite the geopolitical and economic challenges we face. The resilience of silver prices amidst these challenges underscores its importance as both an investment and an industrial commodity. Section 5. Ricardo Evangelista, a voice of reason in uncertain times. Ricardo Evangelista is a senior analyst at Active Trades. He believes that the current rally in gold prices is sustainable. He points to the ongoing geopolitical and economic uncertainty as key drivers. Evangelista argues that investors are losing faith in fiat currencies. They are looking for alternative assets to protect their wealth. Gold is a natural choice. It has a long history as a store of value. He also notes that central banks are continuing to buy gold. This is a sign that they are concerned about the future. They are diversifying their reserves away from fiat currencies. Section 6. Michelle Schneider, Navigating the Silver Lining. Michelle Schneider is the Director of Trading Research and Education at MarketGauge.com. She is bullish on silver. She believes that it has the potential to outperform gold in the coming years. Schneider points to silver's dual role as a precious metal and an industrial commodity. She argues that the demand for silver will continue to rise as the global economy recovers from the pandemic. She also notes that silver is still undervalued relative to gold. The historical gold-silver ratio suggests that silver has room to run. Section 7. A word of caution, the importance of vigilance. While the outlook for gold and silver is positive, it is important to remain vigilant. Precious metals have historically been seen as safe havens during times of economic uncertainty. However, this does not mean they are immune to market fluctuations. Investors should be aware that even assets considered stable can experience volatility. The markets are constantly changing. Factors such as interest rates, currency values, and global economic conditions can all impact the price of gold and silver. Staying informed about these variables is crucial for making sound investment decisions. What goes up can also come down. The price of gold and silver can rise rapidly during periods of high demand, but can also fall just as quickly when market conditions change. This cyclical nature means that timing your investments is key. Investors should keep a close eye on economic and geopolitical developments. News events such as elections, trade agreements, and international conflicts can all have significant impacts on market sentiment, and consequently, on the prices of precious metals. Any signs of a resolution to the war in Ukraine or a slowdown in inflation could put downward pressure on gold and silver prices. Conversely, escalating tensions or rising inflation could drive prices higher. Understanding these dynamics can help investors navigate the complexities of the market. It is also important to remember that past performance is not necessarily indicative of future results. Historical data can provide valuable insights, but it should not be the sole basis for investment decisions. Market conditions can change rapidly, and what worked in the past may not be effective in the future. Just because gold and silver have performed well in the past does not mean that they will continue to do so in the future. Investors should diversify their portfolios and consider a range of factors before making investment decisions. Vigilance and continuous learning are essential for navigating the ever-changing financial landscape. Section 8. Seeking expert guidance. A prudent approach to investing. Investing in precious metals can be a good way to diversify your portfolio, but it is important to do your research and understand the risks involved. Before making any investment decisions, it is always a good idea to consult with a qualified financial advisor. A financial advisor can help you assess your risk tolerance and develop an investment strategy that meets your individual needs. They can also provide guidance on how much of your portfolio to allocate to precious metals, and they can help you choose the right investment vehicles, such as gold ETFs, gold mining stocks, or physical gold. Section 9. Conclusion: the golden opportunity. The current surge in gold and silver prices is a reflection of the uncertain times we live in. Geopolitical tensions, economic instability, and rising inflation are all contributing to the demand for precious metals. While the future is always uncertain, gold and silver have a long history as safe haven assets. They have the potential to protect wealth during times of turmoil. Investors who are looking for a hedge against inflation and a store of value may want to consider adding gold and silver to their portfolios.
Hi, I'm Amelia from GiveMeTheGold.com. Picking the right precious metals company is important, so today we will go over 3 highly recommended companies from GiveMeTheGold.com. Our panel of experts have picked these companies based on reliability, customer service, and other factors. You can also see our complete list of companies and more information by going to our website at GiveMeTheGold.com. Our first recommendation is Augusta Precious Metals. They have been a trusted name in the precious metals industry since 2012. They are the top recommendation for accounts with $50,000 or more to invest. They combine their top education and white glove services to make it an all-around excellent experience for their investors. To get more information, visit easygoldinvestments.com or call them at 1-855-470-4636. Our next recommended company is GoldenCrest Metals. They are a standout choice for investors seeking to start the gold IRA journey with a minimum initial investment of only $10,000. GoldenCrest Metals has a customer's first approach and great guidance by their professionals to help you get started. Visit their website at goldencrest.info. Our last recommended company for today is Colonial Metals Group. Colonial Metals Group stands out for its competitive promotional offers designed to give investors added value when starting a gold IRA. They provide access to exclusive deals on precious metals and other perks for first-time clients, including a free safe. To get more information, visit freegoldkitnow.com. You can see all these links for your convenience underneath the video in the description. To see the extended list of all the company, visit the website at GiveMeTheGold.com. I'm Amelia from GiveMeTheGold.com. Wishing you the best in your financial endeavors, and thanks so much for watching.